Okay, I've got 5:30 Mountain Time, so we'll go ahead and get started. Good evening, everyone. This is Mary Kurzweil here at CattleFax. So I'd like to just start by welcoming you all to our CattleFax Trends Cow-Calf webinar. Thank you guys for joining us. We're really excited to put this on. So to start out, I'd like to thank Elanco for making this possible and sponsoring this event. We love to bring this to you and hope that you get a lot of value out of this. And we really appreciate how much they partner with us and help us to put this on for everyone. So I'll start out by giving you guys a preview of what we're going to go through. So I'll start by covering some of the corn and hay situation dynamics, the supply, demand, prices there. I'll talk through competing proteins pretty quickly and give kind of a general economy update. And then our other CattleFax analyst, Terrell Platt, will come on and he'll talk through cattle supply and demand expectations. And then using that, he'll give us a good 2023 cattle market outlook. And then we have Dr. Mark Hilton here from Elanco, and then he'll talk through some animal health things and cattle health in particular. So we'll go ahead and get started. A quick reminder that as we go through here, we've got a questions box here in the GoToWebinar. So if you have any questions as we're going through, if you type them in there, we can all see it. Us presenters can all see them, and we'll try and get to them before the end of the webinar. So feel free to put those in there as we're going, and we'll try to get to as many as we can. And like I said, I'm Mary Kurzweil here at CattleFax. If you have any questions in particular about what I cover, you can feel free to email me. This recording will be available through this link for the next 30 days, and then we'll be on our website as well as on YouTube. So you can always look back at that. So to get started, to go through some of the corn, I'm going to start with our supply and our demand situation. So the most recent WASDE report that came out last week showed that overall we were down about 4.7 million acres and harvested 6.1 million fewer acres than what we did last year. So that put our harvested level at 89% of what was planted. And a lot of that was poor weather conditions created poor yields. And so some of those fields that were normally harvested were chopped for silage or something else instead of being harvested. So that's why that came down a little bit and our yield came up in this newest report, is because I think that is an adjustment for some of those acres that weren't harvested and were instead used for silage. So overall, this gives us production down 1.3 million. And then we did have a little bit higher in our beginning stocks and imports. So overall, we were down in our supply by about 1.1 million bushels. So our demand was down as well, not enough to make up for the supply, but feed residuals saw a pretty big hit. It was down 1.1 million bushels. And a lot of that is we've got a smaller cattle supply. We've also got a smaller hog supply. And so there's less of a demand there. Ethanol was pretty well unchanged. There's requirements within the fuel industry where we're kind of at the required amount of ethanol that needs to be used. And so that demand's been pretty stable. Domestic use has gone down some, and then exports went down quite a bit as well. And so all in all, we came down in stocks to use to 8.9% compared to 9.2% last year. So then we're going to go through each of those different parts a little bit individually. So our yield was down this year pretty significantly compared to trend line. Over time, we trend higher for our yield, but with the poor weather conditions, as we were in the La Nina pattern, we lost quite a few yield relative to what the trend line would suggest. Going forward, we do expect some improvement, but we still expect to be below that trend line going into our next year. And so all of that kind of brings to our smaller corn production. If you look historically, it's not too small, but our exports are quite a bit larger than historicals might suggest. And overall, that led us to just a pretty tight supply. But with our With our yield down almost 8 bushels below our trend line, and then the acres down 4.7 million, our production was down pretty significantly compared to 2021. So 2022 has seen some smaller exports this year. That's with our higher prices and just a smaller demand to China. Going forward, we expect the exports. So this newest report put exports right between 2018 and 2019. So they just lowered their newest number down 150 million bushels to 1.925 billion bushels. So this puts exports right between 2018 and 2019. And so that's a pretty significant drop, but with where we're at right now in outstanding sales, you can see that we do fall right between 2018 and 2019. And then a lot of that is expectation that Brazil is going to be producing more this year. They're on track for record production and record exports, which will be just more competition for us in the global market in exporting corn. So far this year, though, we are on pace for a pretty strong export year. It's got us on pace with 2020 and 2021, which if you look above, those were pretty strong export years. So we will need to slow down our exports quite a bit for corn in order to get that pullback in exports and keep a pretty strong supply. So if we do end up exporting more, that'll pull out a lot of our supply and put us in a pretty tight situation, which would allow prices to move quite a bit higher. Like I said, with Brazil, they're looking at record production for the 2021-2022 crop year, as well as the 2022-2023 crop year, just with forecast right now. And so with that, they're expecting to double their exports from 2020-2021 years, which will be a lot more corn in the global market and will slow our export demand going forward. Another thing that slows our usage in corn is that bean residual is down. I kind of mentioned this earlier, but we've got a smaller cattle supply with the drought and the cattle culling and where we are in the cycle. We've got fewer cattle. You can see that in the top chart in that red line. And then also our US pork supply, our hog supply is down, our hog herd is also down. And so with that, that's fewer animals and that's slower demand for the feed and residual use for corn. And then, like I said, ethanol is pretty steady. Ever since about 2010, we've kind of found a range of how much corn we need for ethanol, and we're pretty well within that range, and that's what we would expect going forward here. But as many people know, the corn basis has been a pretty big issue. So this year we saw some very large basis numbers, really the last few years. And a lot of that is with challenges in transport, as well as the tight supply. We don't see this going away too quickly, at least until we get into a new crop year and get into a higher supply. But we also don't see it getting much worse here as we go forward. So this could come lower, but we do expect it to be wide at least through this summer for the corn basis. So what that gives us for this year is we've got an average price expected to be $6.94, but so we've got it at $6.25 for this year. So 2022 averaged $6.94. Again, that was with the tight supply. And what we're seeing this year is kind of a tale of two halves of the year. So for the front half, what we're in right now, we are in a tight supply of corn. But as we move forward, we expect to move into a better weather pattern, which Terrell will go over that in more detail later. But as we get into a better weather situation, we're expecting to have better yields, at least steady acres for corn, and that could bring prices quite a bit lower as we go forward into the second half of the year. So once we get into the new crop part of the year. So overall, that gives us a rough range of $7.25 to about $5.25, with the lower end, of course, being in the second half. So that would be like the fall crop. And this shows it pretty well. So this year, this is a supply and demand relationship to look at. So This bottom is our supply, so our stocks to use number is what we look at. And here on the left is our price. And so there's a pretty general pattern that if you account for inflation, it kind of makes this nice curve where you can see that as we get into more corn available, we do get into a lower price range. But here in the last year, we had less corn. And so this higher price range was pretty much right on that line. So going forward next year, so right now we're at the 8.9% stocks to use. But going in by December this year, we could see us being at a 10 to even 12% stocks to use as we get better production, better yields, and then we still have our slower export demand, slower feed and residual demand. So if we were in a 10 to 12% stocks to use range, that would put our price around this $6 down to even $5.25 at the low. And so sitting today, we're at a December futures price of about, I think it's 601 right now. And so that's right within the fundamental range if the supply and demand expectations do come into fruition. Okay, so now we're going to move into our hay. So hay this year, we had more acres. So we were up 2% in acres. So pretty steady, really. And it's been steady since about 2016, steady to a little bit lower if you look at the trend. But our production this year was down a lot. And that's just with the poor rainfall and tough weather patterns. So our production here was actually down 8% with our yield down 7%, which is the lowest it's been since 1959. So this is a pretty historically low production for hay, and that put our December stocks down to the lowest we've seen in at least 30 years. And so that's really driven hay prices higher. This kind of shows a good relationship here of as we get into a smaller hay supply, our prices are moving higher. Now, I think hay could be a pretty similar story to the corn as far as a tale of two halves. As we get into the spring and the summer, we're expecting to transition out of our La Nina weather pattern and into more of a neutral or even El Nino pattern, which will allow there to be more hay production as well as more grazing, so slower demand for hay as well by the second half of the year, which could bring that 225 down quite a bit if we do get into that situation. So now switching gears a little bit, we're going to talk about some competing proteins. Pork production has been on a downward trend the last 2 years. So we were down 2.2% in 2021, down another 2.5% in this last year. And then this year, we're going to start the first half of the year down a couple percent, but we're expecting some recovery and have it about steady for next year or for this current year. Poultry's been on a pretty general uptrend. You can see pretty much since 2011, 2012, we've been increasing our poultry production. There was a slowdown there as we had to build more brick and mortar, but there's been room for expansion here. So we were up about 1% this year, expecting 1% to 1.5% next year of growth in poultry production. And so that we're seeing quite a bit of growth there. But overall, we don't see this as a hindrance to the beef market. So if you look at our total protein production, we are down for this calendar year. So we were about steady in 2022, with beef production being pretty solid, up a little bit, pork being down about 1.9%, and poultry gaining some there. But then going next year, we're expecting some decline there with beef. And Carol will go through that a lot, but with our tighter cattle supply, a large drop in beef, even if pork is steady and poultry gains, we're still going to be down in our overall protein production there going into 2020 or through 2023. So that shouldn't be harmful to the beef sector, even if those others do grow some. And so now I'm going to jump into just a few economic factors. So we've seen some of the strongest interest rates here in the last few months as the Fed has tried to control the inflation. If If you look at inflation, it's the highest that we've seen since the 80s. And so to counter that, the Fed has raised interest rates to the highest that we've seen since 2008. And so with that, so despite that, that is harmful to consumers and potentially harmful to demand, but we're seeing some low unemployment rates through this time. So that big spike there is through COVID, but since then we've come down to a really low level if you look historically. So even though consumers are fighting inflation, there's a low unemployment, and a lot of them are bringing in some income, which is positive for the overall retail and food service sectors. But if you look at our per capita disposable income, that's taken a pretty big hit here in the recent months with that inflation. So on average, we would say the consumer remains financially sound, but inflation is kind of eating into those savings that they might have gained throughout the pandemic, and even bringing us below the trend line that we've had, the upward trend that there's been since 2014. So with that, even though there's such a low unemployment rate, there is still some challenges that the consumers are facing with the inflation that we've seen. But even though beef is the highest priced protein between it, pork and broilers, it's still taking the largest portion of the market, the retail market share. So beef has just grown. If you look at these bottom blue bars, you can see that beef has just continued to grow, as well as the protein in general. So beef continues to take a large section of the consumer expenditures. Consumers have continued to show willingness to pay for high quality beef and still seem to have a preference there. But overall, more money is going to the protein sector. So all of that's very positive for the beef going forward. So now I'm going to turn it over to Terrell Platt. Again, if you had any questions, please type them into our box there. And then Terrell's going to go over more of the cattle markets, cattle supply, and then give a nice forecast going forward.
All right, can everybody see my screen now? Or Mary, I guess?
Yeah, I can.
Perfect. So like Mary said, I'll be covering the supply and demand outlook on the cattle side, as well as an outlook for 2023. And first, when we start off and look at where we are today, we do have to continue to start talking about drought. It remained a challenge throughout 2022 and was very much reflected in terms of beef cow herd liquidation. You can see here, we can look at where we are today in 2023 relative to where we were a year ago, and some drought intensifying there across the plains, particularly in Nebraska, Kansas, and Oklahoma. Some improvement out west, but still a long way to go here. But one of the positive factors that we have started to pick up is this ENSO forecast. And what this forecast does is outline what the probability of each of the three weather patterns are going forward. First being La Nina, where we are today, and transitioning more towards a neutral pattern by March, April, or May of this year, and then with a higher probability of El Nino later in the year. So this is encouraging to see as we head into 2023, as it should bring a wetter weather pattern going forward, but it may take time for this to manifest until we fully move into El Nino later this year or early into 2024. In terms of an update on commercial beef cow slaughter, we killed just over 4 million head this year in terms of the beef cow herd. That would be the largest commercial beef cow slaughter since 1996. It's definitely a very tough year, but we are expecting a big reduction in cow slaughter, meaning we'll kill fewer cows going forward, with about 800,000 head reduction in 2023 and smaller declines in 2024 and 2025, all pending on when rains manifest and allow for expansion to start to take place in the cow herd. Still, with the likelihood of drought remaining a challenge, at least in the first portion of 2023, we may still be in a liquidation phase. So when we look at the beef cow inventory, we do have a pretty significant drop from 2022 to our forecast for January 1, 2023. And we'll get the final numbers on this data here at the end of the month. The cattle inventory report will be released on January 31st and give us an idea of where the beef cow inventory stands today. But a pretty sharp decline, probably the biggest decline we've seen, at least going back through 2000 in terms of a year-over-year decrease if that forecast comes to fruition. When we look at this and compare it back to the last drought cycle, see that the inventory is just slightly above the lows in 2014. And depending on how long drought remains an issue, liquidation will continue, and we'll likely see the cow inventory tip below that last historic low that we established in 2014. Whether that comes in 24 or 25 will all be dependent on Mother Nature. But when we think about this from a supply standpoint in terms of our calves and feeder cattle, we're building off the 4th year of liquidation, and that means we're on the 4th year of smaller calf crops and feeder cattle and calf supplies. Now, they aren't record low, but they are historically tight in terms of our forecast for 2023, down just about 337,000 head versus 2022. This is going to be a major factor going forward in terms of cattle on feed and placements, where there's just going to simply be fewer calves and feeder cattle out there that will support the underlying market as these tighter supplies unfold. Now, steer and heifer slaughter has been an interesting one in 2022. We would have expected it to actually be below 2021, but we've seen cattle feeders be pretty aggressive in terms of marketing cattle through here. Packers have remained aggressive in wanting to kill cattle, particularly through the 4th quarter to fill beef orders for the holidays. We're actually going to have 2022 fed slaughter up just a tick from 2021. But it's kind of been a function of drought force placements earlier in the year where it forced cattle into the feed yard sooner than maybe would have been anticipated had they been able to graze out on pasture this summer. So moving forward with those tighter supplies and tighter calf crops, we're expecting about a 700,000 head decline in steer and heifer slaughter next year. As you move further out into the forecast into 2024 and 2025, the thing to think about and realize is as precipitation returns across the country and we're able to start expansion again, we'll actually pull heifers out of the slaughter mix to a certain degree. The kind of benchmark we look at is when heifers make up less than 37% of the fed slaughter mix, we're in an expansion phase. Right now, we're closer to around 40%. So we'll see fewer heifers go into this fed mix, and slaughter will actually continue to move lower past the decline or past the once we make a low in the beef cow inventory. On the production side, 2022 will mark the 4th year of record production levels. Ultimately, that's been a function of pushing cattle back through COVID challenges, plant challenges, big weights that have elevated these production levels. Now that we've had big slaughter again in 22 and gotten the fed cattle supply substantially more current and expecting that big drop in fed cattle slaughter next year, as well as a drop in beef cow slaughter, our commercial beef production, as Mary mentioned, is forecast to be down 4.2%. That's a pretty big year-over-year decline and will come as a very supportive market factor to beef values and cattle values alike. Looking at just the import and export side, exports for 2022 are slated to be up about 3.5%. We've shipped quite a bit of beef to Japan and South Korea have been major staple markets for us as always. In addition, we've still had growth of exports going into China. Next year, though, we do have exports down about 2%, with the main reason being not a lack of demand from those key countries so much as just tighter domestic production. If there's any of our export destinations we're maybe expecting less growth or a modest pullback, it would be China with their lifting of their zero COVID policy and some of the ramifications they're facing there in economic turbulence. But even though we've had a turbulent market from a foreign currency standpoint in 2022, our key destinations have remained very stout for us, to the tune that our total export value for 2022 will meet or exceed about $12 billion. On the import side, we had them, they were about even, just below, I guess, sorry, in 2022. We had bigger imports in Brazil to start the year because they were shut out of the Chinese market, and still had some bigger imports from Mexico as they've shifted from sending us feeder cattle to building their own domestic production. Heading into 2023, we have imports up about 3%, mainly as a function to compensate for our lower decreased domestic production. Now looking at per capita net beef consumption, this isn't a measure of demand, it is just a measure of supply, but what it is our domestic production level minus exports plus imports, and we take that number and divide it by the US population to get an idea of per capita pounds or per person pounds that we have on the market next year. Now, heading into 2023, we have a 2.7 pound drop in per capita supplies expected, and with tighter supplies on the horizon from the result of smaller calf crops and reduced fed slaughter, as well as once the herd starts to be rebuilt, we'll see this per capita net beef consumption continue to decline. But again, it's not necessarily a measure of demand. It is just a measure that we have less beef that per person in the country. And as we head closer to 2025, you'll see we'll probably test those historic low levels of 54 pounds per person. Moving on to the price side, we'll start with retail prices. Now the retail beef price had kind of an interesting dynamic there through the COVID period. See a sharp move up in 2020, then correction back down before it pushed higher through the second half of 2021, and it's kind of stagnated between $7 and $7.50. Now, in terms of the proteins at the retail level, beef was the first to move through the inflationary environment. Probably was hit the hardest from a production standpoint with slaughter limitations as well that drove those price increases. But now that it's made that move, you can almost reference that 13, 14 kind of move where it pushes up and then it'll flatten out and become range bound once retailers set prices and consumers show that they're willing to pay that. If we were to compare the beef price level in particular, if we were to compare ground beef to chicken breast, beef still remains competitively priced. Even though it's more expensive than it ever has been, the price of ground beef is about equal to that of a chicken breast right now. But what this basically does for us, or gives us perspective on, is it sets the top and kind of the top side of how much money and where dollars are flowing into the beef system. If you remember the chart that Mary showed a while back, or a few slides back, in terms of consumer expenditure, beef is still what they spend the most money on, and that's what sets the bar for the potential for both wholesale prices and cattle values going forward. One of the big challenges the industry faced through 2020 and 2021 was leverage, where beef prices moved higher, both at retail and wholesale, and fed cattle values didn't reflect that price change. But through 2022, we've seen a significant improvement from the leverage lows that we saw in 2021, and we're actually able to see cattle feeders gain leverage back to about 50% of the beef cutout for an annual average. That's a pretty big correction in 1 year, and we wouldn't expect similar growth moving forward, but we still will see cattle feeders gain leverage against beef prices in 23 and 24. They'll just be smaller gains. But if we think our expectation for the cutout next year for on an annual average basis is to average about 270, and when we use that 53% leverage and add in a $14 drop, into that, it puts your annual average for a fed steer price about 156, 157, should be about $13 higher than the previous year. How we think this will really take shape will follow that pattern of the non-expansion seasonal. We're in kind of an area of the market currently where it's marking time, waiting through this slower beef demand period in January and February before we head into the spring rally and grilling demand. We expect fed cattle prices to kind of hang out in that mid 150 range until we get maybe towards early February to mid-February before the market really can start to push, and we'll see it make a spring high in that April-May timeframe, and the expectation of around that 165 level. Once we get past there, the market tends to break into the summer and July period. We think there's risk back to around 150. Once the market makes that low, it'll go on and push higher. Typically, your fall highs will exceed the spring high, with our expectation of reaching that 172 level, which would be about even with the all-time record that was set in 2014. Looking at the feeder cattle index, we're at a time frame where there's a lot of volume of feeders that are coming through and can kind of keep the supply bigger in terms of where they fall throughout the year. The bulkier supplies will fall in this first quarter and keep this feeder cattle market more limited. In addition, you can have corn values that are moving higher to secure acres for planting, and then you're placing these animals against the deferred time frame, against your deferred contracts in this at the time where the fed cattle market typically makes its lows. So we'd expect this feeder cattle index to be relatively limited through here, at least through the first quarter, between 170 and 185. But once we get past there, we should start to see it push higher. The expectation of an annual average of 195 and the potential to reach up at 205. Typically, your feeder cattle index highs will come in this August-September timeframe, but in these non-expansion seasonal years, you can actually have the December high exceed August and September, or have the high occur in December, I should say. So that's kind of what happened in 2022. So it wouldn't be a surprise if that went ahead, and I think we looked at the data in the last 20 years, about a third of the time the high actually comes in December, which kind of counter to maybe what this index might imply if you're just looking at the 20-year index. Similar story in terms of 550-pound steers, where higher prices are expected next year, but the seasonal pattern is just a little bit different on these lighter weight calves. Right now we're getting into the time where this market should start to push higher, with expectations of reaching about 235, 220. Probably has the potential to reach 235, but this seasonal pattern largely takes shape as calves are bought to be put on grass for the summertime. So it's going to be highly dictated by the kind of precipitation and the grazing outlook that we see heading into the summer time frame that sets kind of the top end potential for these lighter weight calves. But still, the overall theme, whether it's fed cattle, the feeder index, or these calves, is that we're expecting higher prices as a function of tighter supplies in 2023. This just kind of outlines how we come to those numbers of 220 and 234, looking at the change from the second half low to the next half high, and that's where we get into this price level here, pushing from the current 210 levels. Before we talk about cull cow prices, it's important to highlight 90s. This 90 lean beef price makes up about 70% of the cull cow cutout. So if you want an indication of where cull cow values and what their potential is, it's a good place to start as an indicator. And I think this has been an interesting market to watch from 2021 into 2022. If you look at second half of 21 all the way into September of 22, we had a largely range-bound market between about 285 and 270. And all at the same time, we had massive cow slaughter through here and larger imports, but this 90s market held together really well until we really got into still big cow slaughter into the fall that pressured it back down to 240. But once the market established support down there and it started to push higher, as we get into a period where we should have decreasing cow slaughter, we'll see 90s start to firm. This may be a little bit rich on the forecast, but the overall seasonal tendency should hold true. As we started to see 90s move higher, the cull cow market is just started to move off its lows. It held down in that $75 range a little bit longer than we would have expected. Typically, if you look at this index, prices make a low in late November at the time when a bulk of your cull cows hit the market, and then start to move a little bit further, a little bit higher as you get past that time frame, that key culling time frame. But a bulk of this move doesn't occur until you get later into February, if you look at this index. So our expectation as we start the year about $75 is for the market to average about 100 and reach this 90 to 95 price range by March or April. Again, with tighter supplies, this chart just shows the correlation between our 550-pound steer calf price and a bred cow value. The thing to expect going forward that as we see these calf and feeder values increase, we also will see bred cow values increase. The thing to think about longer term as we get past the liquidation phase and can start to work towards expansion is how long prices will stay at elevated levels. I think looking back at the last cycle, that buying a cow at $2,400 or $2,600 can be a challenge to get her paid for once prices correct lower. So just something to keep in mind once the rains start to come of what's feasible to make a cow pay for herself relative to long-term averages and feeder prices. But this just kind of sums all those up together between the cutout, fed prices, and feeder and steer prices. You can see if we look back through 2020 and 2021, the beef had a lot faster move to the upside than our cattle values did. But we've started to see those gains occur in 2022 where cattle gained on beef actually moved lower. We have beef moving up slightly, but the main changes in the market were going to be margin realignment, where there's been more margin at the packer level and margin at the retail level, that those dollars will shift back to cattle values in the coming years. Just looking at a profitability standpoint, there still is more margin in the system than there ever has been as a function of increased quality grade and bringing more consumer dollars in over the last 2 decades. But all the supply challenges, particularly with packing capacity and supply imbalances, hasn't really allowed cattle producers to make their fair share. But we're starting to see improvements and the expectation for those to continue as we move towards this tighter supply situation, and demand remains historically strong for beef at the retail, wholesale, and global levels. With that, that's about all I have. Mark, I'll make you the presenter.
We have a few questions.
Oh, do we?
Yeah, we have a few questions here. So one of them, or a couple of them, are asking about the beef on dairy calves that are now in the stream. So with those, dairy is not necessarily a new part of the beef industry. It's just an improved version. So even before we started doing this beef on dairy, we had a bunch of Holsteins coming into Holsteins or Jersey, but mostly Holsteins coming into the yards. And so now that's a beef on dairy animal. So largely, we see it as more of switching out to a higher quality animal. And so as we get into a tighter supply, it shouldn't be harmful to the beef calf by any means, because we're still moving into a tighter supply. The dairy herd is about 9.4 million and has seen some long-term uptrend, but they only gain about 100 to 200,000 a year. So with that, that's not too much of an increase with overall supply, and more it's swapping out that straight Holstein calf for a beef on dairy calf. So it's more of an upgrade to what was already there. There might be a few more with the sex semen, and we are seeing just a little bit of that, but it shouldn't be more than a few 100,000 at the most in order to still maintain the dairy herd. Another question I see on here is asking about cattle imports from Canada. So that's kind of been big here lately. They've faced a lot of the same trends that we have as far as tough grazing conditions, high corn prices, and that. So we've seen feeder cattle imports up 38% for 2022, but most of that was in the first half. What's been up lately has been slaughter cattle from Canada. They're pretty backed up, their supply chain is, just here lately. So they've been sending more of them here to be killed, especially if we have a little bit more space there. But going forward, I wouldn't expect that. They've had pretty hard liquidation as well, kind of following our same trend with the Cowherd. So I wouldn't expect that to be long-lived, but here lately, it's been pretty strong, especially from the slaughter cattle.
So Mary and Terrell, are you seeing my correct screen here, or are you seeing the wrong one? I've got two screens in front of me, so I want to make sure I'm correct.
We're seeing your presenter view, so I think we want your other one.
Okay, let me see if I can switch that out.
Now we're seeing your screensaver.
Okay, gosh darn it. That's the problem with having, let me pull that off of there.
Yeah, we're seeing your PowerPoint mode.
Gotcha. I'm going to be in the right spot here in just a minute.
There we go. Now you're good.
How we doing?
Yep.
Is my little webinar thing in the way?
No, you're good.
Okay, cool. Hey, thank you very much. Sorry about the technical difficulties. That's not my strong suit. So yeah, well, some great information, Mary and Terrell. Elanco's thrilled to sponsor these things. So what I'm going to talk about this year, or this presentation, is spring processing of your cattle. I know that, sure, there's fall calving herds in the United States, but I think 70–80% of people calve in the quote spring. So I guess that would include late winter and spring. So that's what I'm gonna talk through here, and I'm glad to take any questions. So that'd be just fine. So what we did, we put together a sheet that is kind of a template, a base to start with, and the sheet right at the top of it says, take this sheet to your herd health veterinarian and get it customized to your herd. Because I saw we had about 100 people online, and if I or the herd health veterinarian sat down with them, every one of those herds is a little bit different. So you really need a customized program for two reasons. First of all, you want to be giving the right product at the right time. And the second thing is, you don't want to be either missing out on something that you need, or you sure don't want to be over vaccinating for things that you don't need. So I, as a veterinarian for the last 40 years doing cow-calf, I love sitting down with producers and saying, hey, you don't need this. Let's save your money. Take your wife out to dinner instead of spending your money on vaccine you don't need. So nothing's more important than colostrum. We want those calves to jump up quickly, nurse a full belly of colostrum. I've got a herd of my own, and I have colostrum replacer on hand. I've always got a bag just in case I need something. Bovine respiratory disease is by far the most common disease we see in our cattle, and that's what we want to prevent. That's why we have huge demand for preconditioned calves that have been weaned at least 45 days at a double round of modified live vaccinations. The feedlots are begging for those cattle because the research shows they don't get sick as often as a calf that's unweaned and unvaccinated. So first thing we suggest is a viral respiratory disease. I've used Titanium 5, our modified live product, for over 20 years. It was the first one on the market that had VVD type 2. It's super easy on calves. I love it. Of every vaccine Elanco has, it's my favorite. Like I said, I've used it for long before. Oh, I didn't give you a background. I'm a farm kid from Indiana. Went to, we had a beef and swine farm, went to animal science and vet school at Purdue, practiced in DeWitt, Iowa, had awesome clients out there, and we loved our time in private practice in Iowa. I was there 15 years, and then Purdue called me and said, how would you like to come back and teach? So I was a professor at Purdue. I took students on ambulatory calls, taught beef production medicine. I did that for 18 years, and I've been with Elanco almost 7 years now on the beef team. So cow-calf's been my focus for 40 years. Gosh, it's hard to believe I'm that old and I've been doing it that long. Anyway, again, Titanium, my favorite vaccine of everything. I've used it for over 20 years. Awesome vaccine to get into your calves at that, 2-3 month of age time, that branding time. Nuplura is our Mannheimia hemolytica vaccine. has 35 times less endotoxin than a vaccine that we tested it against. Endotoxin makes the calves look terrible and feel terrible, and there's no reason to put extra endotoxin in them. So if you want to see how New Plura is made, you can actually go to YouTube, punch in New Plura pH, and it'll show you in about a 2-minute video how it's made. It's really pretty exciting. 7 or 8 way Clostridial depends on where you live. Talk to your herd health veterinarian. Get the calves. I just did a meeting last night up in Wisconsin, and one of the producers said, oh, I always leave my calves bulls till they're 500 pounds and I get that free testosterone. There is not one single research project, trial, on-farm trial, whatever, that says leaving bulls as bulls is a good thing. If they're going to be a steer, they need to be a steer day 1 or at the absolute latest 3 months of age. Get the testicles out of the bulls. It is a huge stress on 500, 600-pound calves to cut them, band them, whatever you're doing. They lose weight for about 2 weeks and never catch up with calves that were castrated earlier. Get a component EC with Thailand implant into that calf. There was a research study that showed they had bulls, they had castrated no implant, they had castrated implanted calves. The castrated implant calves weighed more than the bulls at weaning, and then when they followed them a month afterwards, those bulls that got cut by far were the lightest, even lighter than the calves that were steers without an implant. So if you want the best of both worlds, cut them early, get the component EC into those calves. Parasite control on those young calves, probably all they need is a poron for flies, something like permectin CDS. That's what I use on my calves. And then I put 1 insecticide ear tag into the calves. And this is all done. I live in Indiana, so I'm doing this end of May. And again, you need to talk to your herd health veterinarian and find out the timing on when would be best for you. So then we're going to take that same calf and either 4 weeks pre-weaning or at weaning time, give them another titanium 5. If you gave New Plura earlier, you probably don't need to give them a second dose. Probably get by with 1 dose. Again, talk to your veterinarian, and then need another 7-way. And those calves have been picking up parasites all summer long on the pasture. So very important to deworm your calves as they're coming off grass. And I really, again, I've used Cydectin Poron or injectable for many, many years. Excellent product. So get those calves dewormed because they are definitely going to be parasitized. On our heifers pre-breeding, springtime, I'm going to switch to a killed vaccine. I'm going to use either Virus Shield or MasterGuard on these calves. Excellent research out of South Dakota State showed we got 6.5% higher conception rate, first service conception rate, when we used a killed vaccine like Virus Shield or MasterGuard versus a modified live, and got 3% more cows pregnant in the entire breeding season. So we've done the math, and it's worth about $3,000 extra on a 100 cow herd to switch from modified live to killed on the cows pre-breeding. Now we definitely want the modified live on the calves, but on the cows, the killed is the way to go. And again, Virus Shield, MasterGuard, excellent products. On the heifers, these are young animals. Again, have very little, almost no immunity to parasites. So I'm going to use either Cydectin Poron or injectable, give them the permectin CDS, knock down the flies, and we're going to put 2 fly tags in these heifers. Really like to start feeding Rabon in the mineral to decrease the horn fly population and get that going about a month before fly season starts. On the cows pre-breeding, same thing. On the heifers, on respiratory vaccine, killed, inactivated or killed vaccine, Virus Shield or MasterGuard. Now on the parasite control, here's where you really need to sit down with your veterinarian and ask. We're going away from saying let's deworm every cow on the farm, because what happens is if we deworm all the cows all the time, we're going to get more resistance, and we don't want to do that. So here we are at Elanco selling product, and we're saying you might not want to use it. So our rule of thumb is if a cow is 4 years or younger, if she's body condition score about 4, 4.5 or less, she needs dewormed. But like on my own cows, if I've got a 5-year-old cow and she's in body condition score 5.5 or 6 in the spring, she doesn't she's not economically parasitized. She's probably got some parasites in her, but big deal. And I want those parasites out on my pasture because they're not resistant, most likely, to the products. Definitely going to use a fly control again, Promectin CDS. I'm going to put 2 fly tags in that cow because I hate flies, so I want to help that cow all summer and have her not be affected with flies. Don't forget the bulls. Bulls need a breeding soundness exam. It's the most cost-effective thing your veterinarian can do for you. Last I checked, it was like a 37-to-1 return on investment. And I don't know about all of you, but man, if I could invest $1 and at the end of the year get $37, I would be pretty happy. So get your bull semen checked. About 10 to 20% of all bulls that get checked fail their semen check. And that is a disaster when he's out there with the cows, not letting the other bulls breed him, or he's the only bull in the group and you go to preg check and none of the cows are pregnant. So get that breeding soundness exam done well before breeding season. Same vaccine in the bulls, Virus Shield. I would say Master Guard here too. Probably wish I had that on there. And then bulls are a little more susceptible. Oh, foot rot vaccine. Just talked to a producer today that said, man, I have a terrible time with my bulls getting foot rot. And I said, geez, we've got a vaccine called FusaGuard. And he said, I didn't know that. I had no idea. And we vaccinate all of our bulls before we sell them, and really encourage people to give that yearly dose of FusaGuard at breeding soundness exam. The first year you use it, you need 2 doses, but after that, you just need 1 dose of FusaGuard. So on the bulls, again, we're probably going to deworm the bulls. These are mostly younger animals. Bulls seem to be a little more susceptible to parasites. So in the spring, I'm gonna deworm my bulls with either Cydectin Poron or injectable. And then you know how hornflies love bulls. So we're going to pour them with Promectin CDS, and for heaven's sakes, get 2 fly tags in that bull. He really needs the help. We don't want him fighting flies, getting pink eye, not breeding cows during the summer. So I actually have, there's my email address. If you want it's a 1-page front and back handout that is a template of what I just showed you. I would be glad to email that to you. So either take a picture with your phone or copy down my email address there, wmark.hilton@elancoah.com, and I'd be glad to email you that handout, and you can take it to your herd health veterinarian and get it customized for your herd. But with let's see, I took some notes. With according to the information that Terrell just gave, 550-pound steers are going to be worth $235 this year. That's about $1,300. All those vaccines I just talked about on the calves are less than $10. So less than 1% of the value of that calf you're spending in vaccines. So pretty good return on investment to help protect that calf from getting respiratory disease. And on the cow side, helping to protect her to get pregnant. So that's all I've got. Mary and Terrell, if anybody's got any questions, I'm glad to answer them.
Thanks, Mark. That was really great. We do have a few questions that have come in. I'll start with one that I think Terrell could probably address best. So Terrell, what signs should we be watching for if we are going to see weaker demand this year? What would be some signals we can look for?
Yeah, that's a great question. I think the place first to start is just keeping an eye on both the labor market and consumer incomes. I think the one thing that's been clearly communicated by consumers over the last 2 years especially is the willingness to pay for beef even at higher price levels. So as long as their incomes and the labor market remain strong, that will be supportive to their spending power. The other factor that's probably worth watching is just the relationship between beef prices at retail relative to both pork and poultry. And right now, as we kind of mentioned, beef still priced pretty competitively because all 3 proteins are at near record levels or at elevated levels. So if we start to see that relationship change, we could see more substitution. But ultimately, from the protein sector, consumers really value beef as the leader in flavor and eating experience relative to the other options. So I think there's a lot of support there, but those would be kind of the areas to keep an eye on to see if we're actually moving into a weaker demand period than we might anticipate outside of just the general economic challenges that are likely going to linger in 2023.
Yeah, that's great. A couple other things that we want to make sure to tell you all about is we have our annual cow-calf survey coming out. Well, it was just released today. There's a link for that. Carol, where's the link for that?
For the survey or the cow-calf survey, it would have been emailed. It would have been emailed out here today, actually. So keep an eye out for that in your email inboxes. Or if you didn't receive it and want to make sure that you have the opportunity to fill that out, you can email Mary or I, and we'll have Patrick send that out to you directly.
And there's also a link on our website. If you go to CattleFax.com to the About tab, there's a cow-calf survey there. And so you can click on it through there as well. So we'd really appreciate if you send it out. The more responses we get, the better data we can have there. We've got the US and Global Protein and Grain Outlook. That's coming up February 2nd. Then the NCBA convention is coming up as well. So we'll be presenting there at the NCBA conference. You'll see some of the CattleFax analysts there. And then our next webinar would be May 24th. I'm seeing a couple questions here for Dr. Hilton. Dr. Hilton, are you able to see this?
I am not.
Okay. So one of them is, if someone were to be switching to a killed vaccine on cows pre-breeding, is there concern with early gestation pregnancy problems when calves on those cows are given MLV vaccines while nursing?
I'm not 100% sure of the, I wish I could see that. So
if you look where you,
there we go.
Yeah.
All righty. Again, I apologize for my, not wonderful eye mark. Oh, no, that's to me. Sorry. No, can you see the questions in the chat? I cannot for some reason.
There's a questions tab just above that. You'll click the down arrow there.
There we go. I am still not, all I see are the ones that are private to me that you've sent to me. So ask me again and I'll try to listen really closely.
Okay. If someone were to be switching to a killed vaccine on cows pre-breeding, is there a concern for early gestation pregnancy problems when calves on those cows are given MLV vaccines?
So yeah, good. I understand totally now, because the MLV vaccines say right on the label, cannot be given to calves nursing pregnant cows unless the cows were vaccinated with that exact same vaccine. So that is something that producer, because I cannot give off-label recommendations because whoever asked that question is not my client. So they need to go to their herd health veterinarian and ask them that question. If the herd health veterinarian has any questions, they can call or email me, because vet to vet, I can talk to the veterinarian about things that are off-label because that's legal. But I cannot legally give any recommendation to the producer to be off-label. Does that make sense?
Yeah, that makes sense.
And again, I'm glad to talk to the veterinarian. I do this all the time. This is a very common thing for the vet to go, hey, I didn't know this. Tell me about your vaccine. What research have you done? And then I can visit with them and give them that information.
And again, here's Dr. Hilton's email address on the screen. Another question for you. So someone was asking about pastorella in calf shots. Is that a part of your protocol, or is that something separate or would you recommend that?
Right. So Nuplura pH has Mannheimia hemolytica in it. That is by far, not even close, the most important bacterial cause of pneumonia in calves. Pasteurella multocida tends to be a little more of a problem in young calves, like in young dairy calves. And we will get that if we post cattle that die, a lot of times we'll get Pasteurella out of those lungs. But the research on using an actual Pasteurella multocida vaccine is pretty limited, right? It is, if you asked 50 beef, cow, calf veterinarians, hey, should we vaccinate for Pasteurella or not, you'd probably get half that said yes and half that said no. So I hate those answers. I like when things are black and white, but I am absolutely not a veterinarian that has the opinion, hey, the more stuff we can give them, the better. In fact, I want to give them the minimal amount of things because I want their immune system to be very focused on what I really want them to be focused on. So the Pasteurella multocida is questionable how much good it does, and so you'll have a lot of veterinarians that would be on the boat of probably not necessary. But again, you're going to talk to other veterinarians that say, yeah, it's necessary. So another great one to talk to your herd health veterinarian. Ask them specifically about what's going on. You know, are you having pneumonia problems in calves after weaning, or are they nursing calves that are 2 to 3 months of age?
That's great. So I have one more for you, and that's about, and then I think we're through all the questions. So would you not recommend doing, giving pregnant females an egg-killed vaccine?
That's fine. And I'm positive that in the United States, most beef cows get vaccinated at preg check time, and we know that. And absolutely, you want to be using a killed vaccine at that time. You do not want to be using a modified live. Our titanium's actually labeled that if you give a cow titanium pre-breeding, then you can vaccinate her at preg check time with the same vaccine. And I am against that. When you look at diagnostic lab reports of IBR abortions in cows, almost every single one of them is a vaccine-induced problem. And you know, some of these cows that even were vaccinated pre-calving or pre-breeding just like they were supposed to, you know, there's reports of some abortion storms. So love modified live vaccine in young animals under a year of age. And I used to be, you know, when I taught at Purdue, I told the students to use modified live 30 days pre-breeding. But the research that was done up in South Dakota for 3 years in a row showed every single year the cows that got the killed vaccine, the virus shield, had a better conception rate for service and a better overall conception rate. So Elanco actually did some more research, and we found that in about, and I think the number was like 27% of the cows that were given modified live at the time of ovulation, that they had some inflammation of the ovary that caused the CL not to form correctly. So, you know, that's why you need to have a sit down with your herd health veterinarian once a year and just say, hey, here's my vaccination protocol from last year. Is there anything new? Because in 2016, that was new news. And in 2022, we found the reason that we got a better conception rate on those cows, because on some cows, even if they're vaccinated with modified live, they're having an issue. So absolutely, if we're preg checking, pregnant cows should be getting the killed vaccine, and I have no problem with that. Is it better to vaccinate them in the spring before breeding? Maybe, you know, in some situations it probably is, but to walk a cow through the chute just to do that when you got lots of other things going on, I totally understand that. I grew up on a beef farm. You know, my parents were busy folks, and so sometimes we did the cows at preg check also.
Okay, great. That gets us through all of our questions. Again, if you have any follow-up questions or if you like any of this material, you can email either Carol or I. Our emails are right there on the screen. And also, if you visit CattleFax.com, there's a way to contact us there as well. This webinar will be available through this link that you have for 30 days. After that, it'll also be on our website as well as YouTube. So if you want to go back and look at any of this, you can. And I think that's all that we have. So thank you very much, Dr. Hilton. Thank you, Carol.
Thank you. Glad to help.
And thank you everyone for joining.